Now, if you're someone who likes to use trend lines within their trading plan, this is the video for you. Alright, what's going on, people? Welcome back to another YouTube video. So today I want to talk about Trendline Liquidity. Now, there's a lot of liquidity videos out there. For me personally, I feel like a lot of them are way too overcomplicated and too in-depth. The way that I like to trade is very simple liquidity points, looking at double tops, double bottoms, trendline liquidity, and then trading off intraday support and resistance to follow that momentum. Now, whenever I see a trend line coming down that has at least 3 touches without any grabs of any highs, I know that I have to be very, very careful of trading off that trend line, but more so trading against it. Now, when I post on my story, me taking these trades into these trend lines, almost every single time someone goes, why would you short there? Why would you long there? There's a nice trend line. And that's always a good indication that there's going to be some manipulation around there. A lot of retail traders and a lot of textbooks will tell you, if you see a third touch of a trend line, that's your opportunity to take a trade. And in this video, I'm going to show you guys why that is probably the worst thing that you could actually do. And more importantly, how to trade into the liquidity grabs. So let's jump on the charts. So this is an example here on the charts on gold futures. Now I'm only going to be showing this on gold. However, you guys will probably find that this happens on most other instruments as well. Now this is an example that happened live on stream on Tuesday, where gold had this amazing run up. And when I was talking about these two trend lines, everyone was saying to me, why are you not jumping in shorts, Aaron? There's a clear trend line going down, take the fucking shorts. And I was saying to everyone, do not do that. If everyone to me is looking at shorting a third touch of a trend line, I want to either be waiting for the manipulation or, more importantly, buying into that. So I can buy into the manipulation, which typically happens around the second touch of a trend line, and that can be my play for the day. If we keep up running even higher, it's just a full-blown breakout, amazing, we'll make even more. And this is an example, like I say, that happened on Tuesday. I'm not showing you guys some picture-perfect examples that happened previous months ago, and this is the best one. This literally happened live on stream on Tuesday. You guys can go watch it. And these happen literally every single day. So I'm not going to show you guys how to draw a trend line. I'm sure most of you already know how to draw a trend line, but if we just have a look here on gold, this trend line here had 1, 2, 3, 4 touches. Whenever you see gold having 4 touches of a trend line, this is where retails get trapped heavily. In this example, most retail traders will short the third touch of their trend line and put their stop loss above the second touch, because that's what the textbook tells you to do. So they'll be looking to go short here. They'll have their stop loss above the second touch, looking for this continuation back down into some lows. For me personally, and this is the way that I would recommend you guys to trade trend lines, is mark on the second touch of the trend line, because the second touch is typically where most retailers are going to have their stop loss. And then the next TP is going to be up at the main high. But if you can get a good trade into the second touch, from down in these regions, you got nice support, you probably spike down a bit more, you're going to have at least 20 ticks. Amazing, 20 ticks for the day, job done. One thing that I used to do is I used to wait for the third touch of the trend line to get manipulated before I would then re-jump in shorts. However, the better thing to do in this situation is to be looking for buying opportunities up into that trend line. So then, you can make money on the way up, and if you want to take money on the way back down, amazing, you can do that as well. But more importantly, if price just breaks out and keeps pushing higher, then you're going to be anchoring yourself very, very well. And this is what you're going to be doing in the markets. Anchoring yourself to the fact that anything can happen. If I can see price bouncing off a trend line that I know is going to get stop hunted, rather than just waiting for that to happen, let me take a position into that and make money in both ways. This is the scenario on gold. We carried on pushing down a little bit more. People think, this is absolutely amazing. Trading is as easy as just shorting a trend line, because this is what social media tells you. This is what all the books tell you, all the Fugazi BS tell you. Now, here is the example of where retail traders are getting sucked more into this position. You already know when retailers go into drawdown, they're adding into positions. So when you see another rejection of this resistance here, you can already imagine more retail traders are looking to short again and adding into their losers, because that's what retail traders do. They're very emotional. You can see price, there you go. Price reacts initially with a nice rejection. So people go, well, cool. Gold's had this little resistance. You've got some, if we clean this off for a second, you've got some nice rejections. Trend's still bearish. We haven't broken this high. Let me go short again. And then bam, there you see it. There's the spike into that second touch. So if retail traders have their stop loss above that second touch, amazing, their stop hunt won. If they are emotional even more, they're going to bring their stop loss above the original high of the trend line. And this is then when you get these moves on gold, they're very, very aggressive. And they just keep pushing up. And retail traders get massively squeezed out. And these things happen. I can guarantee you these things happen on some time frame every single day. Whenever you see a third touch of a trend line, be looking for buying opportunities up into the second touches, vice versa with the trend line coming back up. Look for short opportunities into the second touch and be drawing on, the risk to reward tool of what, most people will be looking at. And when I say most people, I'm talking to my younger self. This is what I would previously do. I'd be shorting here, I'd have my stop loss above that previous high and always wonder why I kept getting stopped out. And this is exactly why. So whenever I see stuff like this, I'll leave the trend line on. I don't trade trend lines, but I'll leave it on to understand what most people may be looking at. But then more importantly, I'll be marking up my liquidity region. If you want to delete the trend line and then you've got your highs marked out there nicely, that's a pretty nice way for you to mark out your liquidity highs if you don't really know how to do it. In this scenario, this is a perfect buying opportunity because the range is more than big enough. Once you have this little support here again, so gold had a double bottom again. So whenever you guys see a double bottom, like I said earlier, that's again liquidity. So as soon as that double bottom gets grabbed, flip back bullish, that again is your buying opportunity. And I actually wanted to get in this position once there was a little bottom wick on this candle or to come back down and quickly retest these levels. As soon as that candle flips back bullish, even any breakout of this trend line, you can be looking to buy in from these regions. Stop loss goes below the liquidity, up into that third touch 15, up into the original stop loss of most retail traders, you've got 24. But more importantly, when this runs and has this manipulation of this trend line, gold futures can move very, very fast. And this is a move that happened in the London session. So basically what you can be doing is you can be trading below every 5-minute low until the market tells you it's time to get out. Because if you keep on running, where is the last breakout point of where retail traders keep adjusting their stop and they're like, no, if we break this high, I cannot take anymore. It's going to be this double top up here. So in this scenario, you could be trailing above this current 5-minute low, locking in 30 ticks. If you keep pushing, amazing, but if the market tells you it's time to get out, then that's also totally fine. So there's that next 5-minute. So you bring your stop loss there and you probably get taken out. There you go, right there for 34 ticks. Key takeaways from this video are going to be not only understanding trend lines in terms of what retail traders will be doing, but more so, I want you guys to be opening your eyes to the fact that anything in the markets and anything on gold can happen. So expose yourself to the other side rather than, drawing on your trend line and saying, look, I think price is going to come up here. And then once price comes up in here, I'm going to look for, shorts all the way back down to there. And then, you just wait, you wait for price to get up here. Shorts don't work out. Price keeps pushing, but don't do that. Anchor yourself. Take longs from the bottom in case an opportunity like this happens where price just keeps pushing up. And if you took a little loss here or you didn't get the selling opportunity, rather than doing nothing in that meantime, you've also made money and you've also exposed yourself that anything in these markets can happen. So draw on the liquidity of where retails may be looking on trend lines and more importantly, trade into that. Make money on the way up, make money on the way down. For you guys who do trade trend lines, if you do, draw them like this, and whenever you see 3 touches, stay patient because these things happen very, very often. I've talked about on my Instagram, aaron.trades, many a times. You guys can check it out. But if you do want to watch us trade like this live on stream, I'll be live every single day next week in the London session and we'll break down these trades and I'll share this analysis with you guys live on stream in real time so you can see it happen. Now that's it. If you trade trend lines like this. Do not trade trend lines like the textbooks. I promise you it will not work. And when you trade like this, people are going to say, that's stupid, doesn't make sense. That is what you want. You want people saying, why would you do that? Why would you trade into that? Because that's what most people are looking at. And you want to be trading against them, doing the opposite of the masses. So I hope you guys did enjoy this video. Remember, drop a little like, subscribe, all of that good stuff. And I hope to see you guys on the next one. Peace.